Good morning. Here is the one thing worth carrying into today. On the 19th of August, the United States Treasury doubled the size of its long bond repurchase operations from $2 billion to at least $4 billion apiece, starting the 9th of September. The next day, the Secretary said it could go bigger. 4 days after that, reporting surfaced that the money could come out of the Treasury's own cash account, which holds close to $1 trillion. Officially, this is a liquidity measure for a thin summer market. Functionally, the fiscal authority is now managing the long end of the yield curve. That is the job the central bank normally does, and it is happening while the debt being managed just crossed $40 trillion. Here is the board, intraday at midday Eastern. The S&P 500 is flat to slightly lower around 7,670. The 30-year Treasury yield sits near 5.16%, only just off a 19-year high. The 10-year eased to about 4.65%, down from a 20-month high of 4.75 set on the 21st. Gold is near $4,630 an ounce after touching above $4,700 this morning. Bitcoin is around $78,700, having briefly printed above $80,000 on Tuesday for the first time since May. Brent crude is back under $90 on a third straight decline. Summarize that in 4 words: flat equities, screaming metals. First, contrarian read. Everyone is treating the Treasury buyback as plumbing. The Secretary's own framing is that it supports orderly trading in long-dated bonds during a thin summer market facing heavy competition from corporate issuance. All of that is true. Here is the tell. This is the third intervention in the same direction inside 4 weeks. A currency market operation, then doubled buybacks, then we could go higher, then a report that it could be funded from the general account. And after all of it, the 30-year still sits near 5.16%, barely off a 19-year high. When an authority intervenes 3 times and the price it is aiming at does not move, you are not watching plumbing. You are watching a fight. High conviction. Second read. Sam Altman posted 5 words yesterday. We made a chip and it is fast. A large part of the internet decided Nvidia was finished hours before Nvidia's earnings. One correction first. That chip, called jalapeno, was unveiled back in June with Broadcom. What is new today is the first benchmark disclosure, and the numbers are real. On one open model, 1.5 to 1.9 times more tokens per kilowatt, and up to 3.6 times lower latency against systems built on Nvidia's current generation. But OpenAI said something else out loud that almost nobody repeated. Jalapeno is not an outright Nvidia replacement, and OpenAI will keep deploying Nvidia accelerators for both training and inference. So the bear case is not that Nvidia loses the customer. It is narrower and worse. Inference, the highest margin and fastest growing slice, is the slice a customer can most easily take in-house. Revenue can nearly double, and the multiple can still compress. Medium to high conviction. Third read. Brent under $90 on a third straight down day, after Iran and Oman issued a joint statement on an interim framework for reopening the Strait of Hormuz, a temporary joint maritime corridor plus mine clearance. Here is the part almost nobody quoted. Under the proposed arrangement, the inbound route passes entirely through Iranian waters and the outbound route through Iranian and Omani waters. Technical talks continue for another 30 to 60 days, and what they are negotiating includes the future administration of the strait itself. A corridor administered by the country that closed it is not the same asset as an open strait. The oil market is pricing a reopening. What it is actually buying is an option written by the counterparty, medium conviction and deliberately falsifiable. Now follow the money and start with the arithmetic that makes this physical. United States public debt has crossed $40 trillion for the first time. That is roughly a 1/3 increase in under 5 years, and it is a figure now larger than the combined gross domestic product of the next 5 largest economies on Earth. China, Germany, Japan, the United Kingdom and India together are around $37 trillion. Against that stack, the Treasury is repurchasing $4 billion per operation. That is 0.01% per operation. Anyone reading the buyback as debt reduction has the mechanics backwards, and one strategist said so bluntly this week. It is debt reshuffling, not debt reduction. So what does a buyback actually do? The Treasury repurchases long-dated bonds using cash it raises elsewhere, largely by issuing shorter paper. The principal does not disappear. The duration does. Long bonds come out of the market and bills go in. That is a deliberate reshaping of the yield curve, executed by the fiscal authority rather than the monetary one. There is a name for the condition where the finance ministry, rather than the central bank, is setting the shape of the curve. It is not a flattering one. A word on positioning and sentiment, drawn from market and social sentiment monitoring rather than from any single source. The commentary this week is overwhelmingly focused on tonight's earnings report and on whether a crypto bear cycle has ended. The Treasury operation is being discussed as a technicality when it is discussed at all. That is the split worth noticing. Attention is concentrated on the equity tape and on crypto price levels, while the actual regime change is happening in the government bond market, where almost nobody is looking. Crowded attention on one end of the curve, near silence on the other. Sentiment is not a signal by itself, but a gap that wide between what moved and what got discussed usually is. Here is the single most revealing data point of the day. Inflation-adjusted consumer spending was flat in July, against a gain of 0.4% in June. Every other number today is contested. This one is not, and it is the one that decides the next 6 months. The bull case for a soft landing requires a consumer who keeps absorbing price increases. In July, that consumer stopped, not collapsed, stopped. And it happened while headline inflation held at 3.7% year-over-year, unchanged from June and hotter than the 3.6% economists expected. Core held at 3.3. That is the 65th consecutive month above the Federal Reserve's 2% target. Second quarter growth was unrevised at 1.5%. Flat real spending, sticky prices, and 1.5% growth is the precise shape that makes both of the Federal Reserve's options wrong. Cut into 3.7% inflation or hold into a stalling consumer. It is also the shape that makes the buyback make sense as something other than plumbing. If growth were fine, you would not need to bid for your own bonds. Sectors in play: semiconductors. The bull case is that data center revenue consensus at roughly 107% year-over-year growth is not a slowing business, and OpenAI explicitly said it will keep buying Nvidia. The bear case is that custom silicon aims squarely at inference, the part that scales with usage rather than with training budgets, and OpenAI already has generations 2 and 3 in design. The read is that the revenue question and the multiple question have separated. Tonight's print answers the first. It cannot answer the second. Energy. The bull case is that a corridor, even a partial one, removes a genuine war premium. The bear case is that the corridor runs through Iranian waters with no third parties at the table. The read is that this is a headline that trades better than it holds. Precious metals and hard assets. The bull case is 3 fiscal interventions in 4 weeks against 40 trillion of debt. The bear case is that a great deal of that thesis is already in the price. The read is that this trade is a hedge against policy continuity rather than policy failure, which is what makes it durable and also what makes it crowded. On the radar, tonight after the close, Nvidia reports its second quarter. Consensus is around $92.2 billion of revenue against company guidance of $91 billion plus or minus 2%, with data center consensus near $85.1 billion, up roughly 107% year-over-year. Note that the $93 to $95 billion figure circulating this week overstates consensus. On the 8th of September, Canada's counter tariffs take effect. Duties of 15%, 25% and 50% across roughly 700 United States products, matching Washington dollar for dollar on about $20 billion of trade, alongside a $7.5 billion Canadian dollar domestic support package. On the 9th of September, the first doubled buyback operation runs. That is the actual test. If the long end does not respond to $4 billion, the Secretary has already told us he will go bigger. And over the next 30 to 60 days, Iran and Oman continue technical talks on a permanent corridor and on the future administration of the Strait. The scorecard, 4 new falsifiable calls, dated today, the 26th of August 2026. 1. The Treasury will not stop at $4 billion. By the 31st of December, either a single operation exceeds $4 billion or the announced maximum is raised above it, falsified if the ceiling holds. 2. The 30-year does not get fixed by the buyback. The 30-year yield is still above 4.75% on the 31st of October, after roughly 2 months of doubled operations. 3. The Hormuz reopening is priced better than it delivers. No permanent, non-interim corridor agreement is in force by the 31st of October. 4. Nvidia reports second quarter revenue at or above $91 billion tonight, the low end of its own guidance band. That last one is deliberately a low bar. The point is that clearing it will not settle the argument. Here is the question worth sitting with. Every intervention this month has been aimed at the price of long-dated United States government debt, and every one of them has failed to move it much. But the other prices, the ones nobody was aiming at, moved a great deal. Gold near $4,630 an ounce. Bitcoin's first $80,000 print since May. When policy cannot move the thing it is aiming at, but moves everything around it. That is not a failed policy. That is a policy whose real effect is somewhere other than where it is pointed. We will be watching the 9th of September. For the full single thesis breakdown of what the Treasury is actually doing, see today's Focus episode. That is the brief for Wednesday, the 26th of August. Research and education only, never personalized advice, and every number in this episode is sourced in the written issue. The asymmetric signal, one contrarian read a day. Subscribe.